Welcome to a special Talk Tickers Deep Dive. Today we are digging straight into the source material for Cloudflare's Q1 2026 earnings call, and if you're tracking the ticker, that's NET.
Yeah, and it is a fascinating one to unpack.
It really is. I mean, our mission here is to deliver a rapid-fire, data-forward breakdown of these results. We're going to strip away all the Wall Street jargon and give you an actionable, really opinionated bottom line. And we're doing it fast.
Right, because nobody has time to read a 40-page transcript.
Exactly. So let's just get right into the central paradox of this entire deep dive. How does a company post a massive 34% revenue beat, totally crushing expectations, and then simultaneously announce that they are laying off 20% of their entire workforce?
Yeah, it's a massive contradiction. Standard sauce physics tell you that you desperately need more headcount to support that kind of top-line expansion, you know?
Right. You need onboarding specialists, you need HR, you need deployment engineers. Yeah. So doing this now, it feels incredibly risky. But let's start with the headline numbers. The raw data here is it's humming.
It really is.
So revenue came in at $639.8 million. Like we said, a 34% year-over-year jump. Diluted net income per share, or EPS, hit 25 cents.
And the cash flow.
Yeah, free cash flow was incredibly strong at $84.1 million. That's 13% of revenue. And the operating margin was sitting at 11.4%.
Those are just stellar metrics across the board. But, we really need to look under the hood to see where that money is actually coming from.
Right, because they aren't just selling to tiny blogs anymore.
Exactly. Cloudflare is not just hosting your cousin's small WordPress site. The enterprise strength here is wild. Customers paying over $100,000 annually grew 25% year over year to 4,416.
Wow.
Yeah. And those enterprise whales now make up 72% of their total revenue.
72%.
Right. But here is the craziest stat from the transcript. In Q1, they added as many $5 million plus annual customers as they did in all of last year combined.
Wait, really? In one quarter?
In a single 90-day window. It's like hyper elite growth. And meanwhile, dollar-based net retention is still incredibly healthy at 118%.
Okay, let's unpack this for a second, because the numbers show a company accelerating, right? They're not slowing down. It's like a rocket hitting its secondary boosters.
Yeah, that's a good way to put it.
This isn't just a basic beat. It's a fundamental flexing of their pricing power and their ability to capture the enterprise market. Which, brings us to the story behind the numbers.
Yeah.
And the elephant in the transcript.
The layoffs.
The shocking pivot. Despite this stellar quarter, management announced they are letting go of approximately 20% of their workforce. That is over 1,100 people.
Right.
And here is where it gets incredibly risky for you as an investor holding this stock. If you're growing top-line revenue by 34%, how do you just amputate a fifth of your workforce without the wheels completely falling off? Are they cutting muscle or just fat?
Well, this is the core of the whole call. Management was adamant, deeply adamant, that this is not a standard cost-cutting exercise to save a few bucks.
Okay, so what is it?
It's a fundamental shift to an agentic AI-first operating model.
Agentic AI.
Yeah. And the data they cite is wild. Cloudflare saw a 600% increase in internal AI usage in the last quarter alone.
600%.
97% of their R&D is using AI coding tools. And get this, 100% of their production code is now reviewed by autonomous AI agents.
100%. I mean, isn't that a massive systemic risk? Having an AI rubber stamp code that powers a huge chunk of the internet?
You'd think so, right?
Yeah.
Any traditional engineering manager would freak out. But the CEO argued the exact opposite. He basically said human reviewers get tired, they get distracted on a Friday afternoon.
Right.
But these AI agents, they're using this internal system they call Cloudflare OS. They have perfect historical memory. They check every line of code against a decade of historical mistakes in milliseconds.
So they're essentially replacing all these back-end processes and support layers with internal AI agents.
Exactly. And that's why they feel confident letting all these people go. But there is a crucial nuance here for the listener.
What's that?
The layoffs affect almost all geographies and functions except one specific group. The quota-carrying account executives?
Salespeople.
The salespeople. They didn't touch them. By replacing the back-end support with AI, they are freeing up cash to hire more frontline sellers.
Oh, to capture more market share.
Precisely, because an AI agent can't go out to a steak dinner and close a $10 million deal with the chief information security officer. You need humans for that.
You keep the hunters, you automate the gatherers.
Yeah, that's exactly it. And on top of that, you have this massive developer boom happening.
Oh, right. The developer numbers were insane.
Yeah, they added 1 million developers to their platform in Q1 alone. For context, they added 1.5 million in all of 2025.
So they are becoming the infrastructure backbone for this whole AI gold rush.
Exactly. They're at 5.5 million total developers now.
Okay, so with all this massive structural shifting, what is management's guidance looking like? How does this impact the rest of 2026?
Well, looking ahead to Q2, the immediate future is strong. Revenue is guided to 664 to 665 million.
So that's keeping that 30% year-over-year growth.
Yep, and an EPS of 27 cents. And for the full year of 2026, revenue is guided to an impressive $2.805 to $2.813 billion.
Wait, what about the cost of the pivot? Like, firing 1,100 people is not free. You have to pay severance.
Yeah, there's a big financial hit. The restructuring is going to result in a $140 to $150 million charge for the year, and most of that hits the books in Q2.
Wow, $150 million.
Right, but here's the crazy part. Despite that massive one-time charge, their free cash flow expectations for the full year remain completely unchanged.
Wait, they just absorb a 9-figure hit and don't alter their cash flow targets.
Not by a single dollar. It just proves the raw, underlying cash-generating power of their business model right now.
That is an absurd flex.
It is. And the CFO brought up the rule of 40 on the call, which is, the gold standard for SaaS companies. It measures your growth rate plus your profit margin.
Right, and 40 is the benchmark for an elite software company.
Yeah, and Cloudflare is currently operating north of 46%.
Okay, wow.
And because of these aggressive AI efficiencies they're putting in place, they have visibility to cross into Rule of 50 territory next year.
Rule of 50 at a $3 billion scale. That's the absolute pinnacle of execution. So bringing it all together, what is the bottom line here? What is the verdict?
Oh, my verdict is clear. I am incredibly bullish.
Really? Even with the layoff risks?
Yes. Because Cloudflare is uniquely positioned. They aren't just selling picks and shovels to AI companies. They're not just routing billions of agentic web requests. They are aggressively eating their own cooking.
Right. They're using the tools on themselves.
Exactly. By using the same AI tools they sell to structurally lower their own operating costs, they are creating a massive leverage opportunity.
So for the listener holding or considering net stock, here's the actionable play. If management actually pulls this off, this is the holy grail of tech investing. You are compounding top-line growth at 30% while structurally, permanently stripping out 20% of your operational drag.
Yeah, the math is just beautiful.
But, keep a very close eye on execution next quarter. You have to monitor if customer service falls apart or if product shipping slows down because of this massive personnel cut.
Absolutely. The execution risk is the only thing standing in their way.
All right. I want to leave you with a broader, kind of provocative thought to mull over. If a cutting-edge cloud infrastructure company can successfully replace 20% of its highly skilled workforce with AI agents today, while still growing at 34%.
It's a scary thought.
It is. What is going to happen to the rest of the Fortune 500 when these exact same AI tools become the standard over the next 2 years?
Yeah, that's the multi-trillion-dollar question.
It really is. Thank you for tuning in to this Talk Tickers Deep Dive. Keep your eyes on the data, and we will catch you next time.